Welcome back, everybody, to our last session for the first day of Amplify. I hope the day has been amazing for you guys. There's been so much great content, so many relevant topics for brokers to help amplify your brokerage. And we're going to get right into our last session, which is this one's going to be a little bit different, actually. We're going to do a little bit of a fireside chat, no fire, but fireside chat with Justin Thouin, who is the founder and CEO of Lowestrates.ca. The title of today's session is Aggregators. Are they broker's friend or foe? And there's been so much talk about this over the years. Justin, thanks so much for joining the session. We're pretty excited to have you on.
Yeah, thanks for having me, Sharif. I'm excited also.
So if you can start just with you kind of introducing yourself, introducing Lowest Rates for those that don't know Lowest Rates, which is not likely, and kind of what is an aggregator. That's probably a great place to start.
Yeah, absolutely. So Sharif mentioned Justin Thouin, co-founder and CEO of Lowestrates.ca. We launched Lowestrates.ca back in 2012, about 9 years ago. And the easiest way to explain an aggregator, we call it a financial rate comparison site, but it seems like the industry calls us aggregators, is we're like Expedia, but instead of comparing flights, hotels, and vacations, we compare financial products for consumers. So consumers come to our site and they can compare everything from car insurance to home insurance, mortgages, loans, credit cards. And what we aspire to do is to compare the market for consumers and answer their questions so that they can be placed and matched with the right partner for their unique needs. So we're trying to save consumers time, make it easier for them to compare and find the right partner, and to save money. And since we've launched in 2012, we've saved Canadians over $1 billion. We've had millions of Canadians come to the site. We really focus right now on car insurance and home insurance. Those are probably our two largest divisions. And we sell or we match consumers with about 50,000 leads per month right now. So we have a lot of different partners, largely brokers across Canada. And we certainly see ourselves as friends to brokers, ergo the title friend or foe, because without brokers, we wouldn't have a business. Brokers are the partners with whom we're matching consumers. And it's our goal from a broker standpoint to be the most efficient way for brokers to scale your business at the lowest cost per acquisition or the lowest cost per sale. So that's what we hope. We hope to save Canadians money by comparing the market, and we hope to help brokers grow their business in a time where, let's face it, it's hard to grow your business as a broker. You've got all these direct-to-consumer insurance companies spending tens of millions of dollars a year on advertising, and so it's tough to grow. And so we hope to step in there and be the most cost-efficient, predictable, profitable way that brokers can grow their business. So I'll leave it there, and if there's any specific questions, love to answer further.
So I'm going to jump in and fill some of the gaps here. And while I'm doing that, I'm going to talk for a bit. I'm going to ask Justin a couple questions, but for you, those that are watching, please start thinking up of some questions to ask Justin. Really, there aren't any questions that are offside. This is a pretty open forum. So start thinking about that. But Justin, just to make it clear to everybody out there, basically, Lowest Rates sells leads. You guys generate the leads online, and you sell the leads to the broker. Is that right?
Yes, absolutely. So what happens is a consumer comes to us largely through a Google search. So they type, "I need car insurance now." They find Lowestrates.ca at the top of the Google rankings. So this is a person with high intent. They're in the market, they're ready to buy now. And that's really important because all marketing sources are not made equal. This is a person that is far more likely to buy than someone who's simply seeing a Facebook ad or seeing a banner ad and might say, oh, let's check this out. So we get the person largely through Google. The person will come to our site and they'll fill out a form. It takes about 5 minutes. We ask them all the personal questions, where they live, their driving experience, the car they drive, etc. And then we compare rates from all the partners that we have. And then whoever has the lowest rate for that particular consumer is matched with that consumer. We only match the consumer with one partner. We do not sell leads more than once in a month. And then it's left for that consumer and that broker to discuss and determine whether the consumer is going to move forward with the broker. And in terms of how often that happens, success is in and around 10%. So 10% of the time, the broker is going to sell the consumer, but that varies. Some of our partners who are lower touch might only close at 7%, and some of our partners who really, really sell hard might close at over 20%. So there's a continuum, but 10% is kind of on average. And so we get paid a fee per lead, whether the consumer ultimately purchases insurance from the broker or not. And that's just because, as I mentioned, there's a continuum. Some close at 7%, some close at 20%. The average is 10, but we don't have much control over what happens once we pass the lead to the broker. But we're focused on passing the cleanest leads, the leads with the highest intent and the most likelihood to buy. And we're also very predictable. If a broker says they want 10 leads a day, we send them 10 leads a day. If they want 100 leads a day, we send them 100 leads a day. So that's another benefit, because you can plan your workforce. If you have the room for 50 leads a day, you don't need to worry about one day only getting 20 leads, the next day getting 80. You can really plan your work and become more efficient in kind of how you deal with these leads.
So this whole idea of leads is a pretty important thing, because at the end of the day, especially in a digital world, you cannot grow your business without leads. This is something that we talk about a lot at Truefla with all of our clients. It's one of kind of the core competencies that we have at Truefla, is being able to not just generate the lead, but manage the lead. And generating the lead is really a tough thing. I don't know if a lot of brokers know this or not. And Justin, I know you'll agree with this. But according to a lot of different online sources, and you're more than welcome to look it up yourself, the most expensive keyword on Google to acquire is the word insurance. There's actually nothing on earth more competitive than insurance online. And if you think about all the different types of insurance, so we're not just talking about car insurance or home insurance. I mean, it's kind of bundled all into one, where you're talking about health insurance, life insurance, mortgage insurance, car, auto, surety, commercial, all different types of insurance. Those are the most expensive to rank for, not just to rank for, but to do pay per click. And so usually, especially for brokerages that haven't typically played in the space before, we usually advise brokers that this is kind of a good, using a site like Lowestrates is a great way to to round out your strategy, because going down just one way is really, really challenging. Being able to round out your strategy is a good thing, but there's typically been some hesitations from brokers for a number of things. So I'm going to jump into. I've got 3 questions that I've got set up, and then we're going to turn it right to the audience. So if you guys can start putting your questions in there, we'll start getting those questions answered. But Justin, let me start here. And Justin hasn't heard these questions. This is totally unscripted, so we might catch him off guard with a couple of these questions. They're a little bit more challenging, but let's start here. So thank you for explaining, kind of what an aggregator is for those that don't know. But there are a number of aggregator sites in the market. I mean, you've got Lowestrates, you've got Kinetics, you've got Rate Hub and Insurance Hotline, who all do the same things, or maybe not. What is the difference between all the all the aggregator sites out there?
Yeah, that's a really good question. So you've got the Kinetics group. Let's start there. And unfortunately for us, Kinetics has rebranded themselves as Rates.ca recently. So I guess imitation is the sincerest form of flattery. And there's a lot of confusion between Lowestrates.ca and what they call themselves Rates.ca. But anyhow, I'll call them Kinetics for simplicity, and so we can keep it separate. So the Kinetics group, they owned Kinetics, which is now Rates.ca, Rate Supermarket, which is now Rates.ca, and they own Insurance Hotline, they own Mortgage Spy, and there's a huge difference. That's who we view as our largest competitor when it comes to providing car insurance and home insurance leads. But there is a huge difference between Lowestrates.ca and the Kinetics group. And the difference is in terms of where we want to go and how we want to share our leads. So as I said, Lowestrates.ca, our goal is to provide the best match for consumers. We are entirely impartial about who we match the lead with. It could be broker A, broker B, broker C, broker D. We want to just make sure it's the best match and the highest likelihood to sell. We're completely impartial. We have no skin in the game. Whereas Kinetics, they have gone out publicly and said that they want to build and grow the largest digital brokerage in Canada. So they have a brokerage in Welland where they have somewhere between 1 and 300 brokers working there. And so they need to feed that beast. And so their goal eventually is to generate these leads online and then consume as many of them within their digital brokerage as possible. So that's a very, very different model. We want to work with as many brokerages as we can to find the best price for consumers. And they're looking to take as many into their digital brokerage as they can. And as they increase their bums in seats, there'll be fewer leads for other brokers to buy from. And that's what we're hearing in the market. Of late, we've had a massive influx of brokers coming to us saying, hey, we'd like to buy some leads because there's just not as many available from them. And then when you talk about RateHub, we don't really view RateHub as a competitor yet. They've had some issues with their quoting accuracy, and they're really a site that's about growing a digital mortgage brokerage. So they have CanWise, which is their mortgage brokerage. They also have CanWise, which is their lender now. They're a mortgage lender. And so the leads that tend to come through RateHub tend to be a little bit more passive, not necessarily people who are right now looking for car insurance, more people that were at their site looking for mortgage and who are just perusing car insurance there. So we really view our main competitor as the Kinetics group, but there's just a huge difference in terms of the direction the companies are going right now.
Okay. Great information. I'm sure a lot of brokers didn't know that actually. So that's great information. Brokers are always a little bit worried about aggregators, and by a little, sometimes a lot, because they think that aggregators will resell the leads year over year. So you've sold me a lead, and then the next year you're going to try to kind of resell that lead to another broker, and that the retention on that business will be lower. Is there truth to this?
There's a little bit of truth to it. I think there's definitely truth to the latter part, in that the retention is not going to be as good. But I don't think that that's just for aggregator leads. I think that as more people become accustomed to going online to find insurance, that people aren't just going to be staying with their same broker or same carrier for year over year over year. As it becomes easier to compare, I think that brokers are going to have to do more work in order to keep retention high. So I think intrinsically, keeping retention high is harder when it becomes easier for consumers to compare, but that's where the good brokers differentiate themselves. So we have tons of different broker partners, different sizes, and there are some where retention's not an issue. They say, Justin, our retention's good on your leads. It's almost as good as when people just walk through the door or when they were referred by friends and family. And it's because these people proactively maybe shop the market for these people, and they know their consumer, they take an interest in their consumer, and the consumer thinks that the broker is proactively providing good advice and acting on their behalf. What we find is the brokers that kind of set it and forget it, where the consumer kind of feels like, oh, what value is the broker added? That's when they may switch again. But we're not actively trying to go out and resell this person. Like, one of our competitors actively requotes the individual and says, hey, we found a better price for you. We don't do that. We're not trying to actively resell the person that we sell you, but it's a lie to say that as it becomes easier to compare, retention won't go down unless you work harder to retain those consumers. But that goes for any sort of lead, right? Mm-hmm. Like, the competition's only a click away online.
That's so true. And I mean, we know that in the digital world, it's both easier and harder to retain the client. Easier because you've got, so many different technologies to be able to, have multiple touch points on that client to continually, kind of hug, hold, and love them to keep them. But also, like you said, as quoting gets easier online, it's more of a conduit for the client to want to reshop. And part of the challenge that we face in insurance constantly is that we sell a product that nobody really wants to buy. I mean, it's a grudge purchase in a lot of ways. So we tend to find that in the online world, they're more apt to want to continually see if they can save money on that grudge purchase. Would you agree with that?
Yeah, absolutely. People don't even understand insurance. Most people, they have no idea about the difference between an insurance company versus a broker versus Lowestrates.ca. Like, you'd be amazed the questions that we get. Some people think we're an insurance company where they call us to cancel their insurance. We have nothing to do with that. So there's a very, very basic understanding. Financial literacy is so low in Canada just because it's not really taught. Like, how would you know? The government doesn't teach it. Schools don't teach it. There's no courses that you can take. So understanding is low, and people view this as a pain. They view it as a legal necessity, but as a pain. So they want the lowest price possible. But that's really where brokers have a marked advantage versus carriers, versus the direct to consumers, because brokers can provide advice. They can provide options. They can take this product that's commoditized by most consumers, and they can create a relationship with that consumer to create value and create retention. And that's the broker advantage versus direct to consumers. That's where you can have better retention. That's where you can have that relationship. And that's how brokers can thrive in the future.
Okay, awesome. Another question for you, and then I'm going to turn it over to the to the audience here. Is there any validity to this statement? The leads that come from aggregators is shitty or bad business in the market?
Yeah, we've heard that, and it's surprising. So I don't know what's shitty or bad business, right? What's shitty and bad business for one company is good for another. I know that there's some companies that don't want young drivers, but then there's some with telematics that feel like they've got a great solution for young drivers. So I would say that the leads that come from us look like new business. So whatever new business looks like, whether you like that or not, the demographics are very much split along what the demographics for the Canadian population are. Our average is in the upper 30s, lower 40s. When we look at some of the things that typically the brokers and carriers don't want, when we compare the leads that come from us versus like our big partners, just direct digital advertising, we thought it would be pretty similar, but this year we were very pleased to see that they actually liked the profile of our leads more than their own digital advertising efforts. So I would say that is absolutely false. I would say that our leads look like new business.
Okay. So we've got a number of questions in the Q&A there. I'm going to ask that if you don't have a question, then please look at kind of the questions that are there in the Q&A tab and vote, so that we can make sure we answer kind of the questions that are most that are most relevant or people want to answer. So let me start with one here. This is coming from Chantel. So she's asking, what about someone looking for a company based on coverage and services? So an insurance company based on coverage and services. For example, looking for, for VIP leads. She's referring to a broker. So looking for VIP leads. Are the leads only based on the lowest premium?
That's the way it works right now. The way it works right now, the way the matching algorithm works is we take a consumer, we put it through our matching algorithm based on all the different prices, and we match the consumer with the partner with the lowest price. So that's how we initiate the relationship, because as Sharif was saying, like, that's the biggest obstacle, the first obstacle. The person has to be comfortable with the price. And so the person is more likely to buy whatever it is you're selling them if they feel comfortable with the price. And the reason why our leads tend to close better than if you do your own lead, then you just generate it to your own site, is because these people feel comfortable. They have peace of mind that, look, I've compared the market and I know this price is good. But now this is where the value of the broker comes in. You don't necessarily need to sell them whatever carrier you're matched with. If you have a better product, or if there are some things that they put in their form that you think they need, that they don't need, that's where you have that conversation with them. And that's when you take the relationship, from digital to analog, and you really create that one-to-one relationship and you add the value. So initially, that's how we create the partnership, because we think that's the biggest bridge you need to get over in order to get the person talking, is price, and the person comfortable with price. But then what you sell them is kind of all the value add that a broker can bring.
Okay, great answer. Next question is from Sophie. How do you decide which broker will get the lead?
Well, it's all based on price. And if there's 10 that have the same carrier at the same price, it's just round robin. And if one buyer buys 100 leads a day and another buys 10, the round robin works. They get 10 for every one that the other broker gets. So it's first of all based on price, and second of all based on how many leads you buy per day, and we round robin it. But we believe in fairness. Like this is a very important point. We try to keep, we call it an ecosystem that's fair for all. So we don't let, for instance, our biggest buyers filter out, all the best leads, because we know that the shit rolls downhill and eventually the shit's going to hit someone. And so that's why we've been accused as being a little bit more difficult to work with, because we do allow some filters, but we don't allow you to filter and say, okay, this is the exact person that I want. I want a 50-year-old driver, 10-star, living in, wherever's a good place to live, right? We have to kind of make it fair for everyone. So we try to create an ecosystem where you get a lot of the good stuff, a little bit of the bad stuff, but you're on a level playing field.
I was going to add on to that question to kind of help, to help the brokers understand it a little bit more. So as a broker, can I buy better leads from you, or is it just it's one playing field?
It's one playing field. We want it to be fair for everyone. We don't want to provide bad leads to any of our partners. Okay. Right? We want to provide good leads that they feel comfortable. They can grow their company. They can grow their book of business. They can grow their enterprise value. And feel comfortable with their leads, and not have to worry about, looking at the lead quality month over month, thinking that, oh no, one of Lowestrates.ca's buyers is cornering the market because they're paying more for a certain type of lead. We charge everyone the same price for the same leads. The only way you can get a price break with us is based on volume, right? So you pay a price if you buy 10 leads a day. You pay a different price if you buy 100 leads a day or more. That's it. Otherwise, you pay the same price.
Okay, awesome. There's more questions that are coming in, so please take a look at the questions, or if you've got a question, submit it, or go in and vote for some of the questions. They're coming in fast and furious, Justin. So, question from Corey: have you seen an increase in inquiries to Lowestrates.ca since COVID started last March?
Yes, there's way more people going online because, firstly, people are worried about money. They're looking to save money as anywhere they can. Secondly, personal financial related items are the place where people spend most of their money, whether it's their mortgage, credit card interest, or insurance. And thirdly, people are just spending more time at home in front of their computer. And so naturally, they're just finding things like financial rate comparison sites. But let me tell you, in Canada, the penetration of financial rate comparison sites is so small compared to the UK or the US. If you're in the UK, this is just what you do. Everybody goes online to compare financial products. No one just walks into the bank and kind of accepts what the bank is offering. So this is a trend that if you look in other countries, or even in Canada, if you look in other verticals, whether it's the travel vertical or the car purchasing vertical, it's just going to continue to increase and increase. If you want a good way of looking at this, you can go into something called Google Trends, and you can drill down on Canada or Ontario and type in terms like car insurance, and then you can see how many more searches there are for terms like car insurance or auto insurance versus there were before. That's just it's a cheap, free way of seeing how many more people are searching and interested in this sort of thing.
And of course, the more interested they are, and the more that people go online, the more challenge there is for brokers to organically rank their sites. Is that right?
Yeah, it's true. I mean, I think, and look, I'm willing to be challenged on this, but I think it's going to be exceptionally difficult for the average broker to acquire new consumers moving forward. It just is, because if you look at it, you've got these massive direct-to-consumer insurance companies that are spending tens of millions of dollars on digital advertising. How are you going to compete with that as an average broker, right? And that's where we feel like we have a real place to come in, because we can be that acquisition tool for you. It's a different world. I think as a broker, you either need to, if you can come up with a different way, that's wonderful, or you need to kind of buy into some of what I'm talking about today, or I don't know how you grow. Maybe you just look to sell your business, and that's happening a lot right now. You're seeing a lot of roll-ups of brokers who say, you know what, this is a different world, maybe I'll just sell.
Okay. This question is from Jillian. Often quotes are based on the lowest rate from misinformation and half-truths from the client. It's not the best start to the conversation when the client has forgotten 5 tickets and is now upset with our staff for verifying the accuracy. Do you foresee a 2.0 version, where this can be eliminated?
I don't know how you get people to tell the truth, right? Like, there's a reason that a good result is that you sell 10% of the leads that we send you. There's some that you're never going to be able to get into contact with. There's some that are going to lie. There's some that are going to not like any price or anything you're going to tell them. It's a new world, and it's not for everybody. That's what I said. Certain brokerages just decide, you know what, this isn't for me. If you're a brokerage and you're used to people in the community walking in, or if you're used to just getting referrals from friends and family, this is a different type of lead, right? It's harder to close. It doesn't close as much. Probably the upper end is about 20% that you're going to be able to close. So that means that 80 of the leads aren't going to close. And so there's a lot of that. And I know that's a pain, but certain brokers get more intelligent about this and get systems where they can more quickly kind of throw away the garbage and focus on the leads that are most likely to close. But I'm not going to lie, that does happen. People lie. And if you have advice in terms of how we can change that, we're open. We're always open to making this better, right? But the corollary to that is if we make it better and we increase the close percentage to 50% from 10%, we'll have to increase our prices by 5 times. So it all works out in the end, kind of the same thing.
It's funny because I tell our salespeople often. I mean, I've been in sales my whole life, and kind of the numbers I've always been working with in my sales career, regardless of industry, has always been kind of if you have a pulse and you're a salesperson, you're probably going to close about 1 in 10 of the leads you get. If you're kind of a mediocre to good salesperson, you're going to close 2 in 10. If you are the best of the best, I mean ridiculous salesperson, you're usually going to close about 3 out of 10 leads. So that's a pretty standard thing in sales. And those that understand kind of the mechanics and all around sales know that, you know, if you're buying kind of 20%, you're doing pretty good. You know, so that's really good information. Next question is from Jeff. Jeff says, we found people who are looking for insurance right now have, for the most part, been canceled for non-payment or they're new drivers. What's your experience on that?
Well, we actually looked at cancellation for non-payment a couple of days ago, interestingly enough. Less than 3.5% of the people, of the leads that we generate, have had a cancellation for non-payment. So not too many. Now, going back to the last point, some of them may have lied about it, but it's not the case. People who are looking for insurance right now are just people who are looking for insurance. It's just like people who are looking for a vacation right now, or whenever COVID's finished, they go to Expedia to compare prices. It's just that people are going online. This is where people are spending so much of their time, and they're used to this. Like, if you think about, where do you buy most of your stuff? You buy it on Amazon, and Amazon is essentially an aggregator or a marketplace. It's just that kind of mindset is now moving into one of the last bastions of where they spend their money, which is financial services. So the people who come through Lowestrates.ca are your neighbors, they're your parents, they're your brothers, your sister, your cousins. These are not simply new Canadians, these are not simply new drivers or those that are challenged. These are neighborhood Canadians. It's just, it's how people are now just engaging in commerce. And I know it's hard to kind of comprehend, but it's just what's happening, and it's moving into the financial space too. It's happened in other countries, and it's happened in other verticals in Canada.
It's happening just about in every industry. I mean, that's just reality. And you know, like we said earlier in the first session in the CEO panel, I mean, COVID has accelerated that. So it's really not that it's coming; it's here now, right? And it's our everyday.
Well, it's not even the thing, Sharif. It's not. It's here in Canada, but it's less in Canada than it is in other countries. So, you know, better to get on board now than before it's too late.
Actually, I'm going to touch on that, Justin. I was going to mention it earlier, but back in 2013. I flew with a colleague to the UK, and we spent a week there purely on a research mission to understand about kind of what happened in the market with aggregators. And what we learned was we learned some really interesting things that really kind of shifted our mind frame and how we were approaching things as a brokerage. So one, even people who work within the insurance carriers, they tell their own families, you know, and themselves, they use aggregators to drive opportunities. But what we learned that, you know, in the Canadian marketplace, and I'm talking about the UK in specific, right? Comparing to the UK in specific. So if in the Canadian marketplace, you know, a broker, you know, broker's retention 85, 90%, you're doing quite well, right? And that's kind of what a broker strives for. In the UK market, for brokerages, if the retention starts to top, you know, kind of 50 to 51%, carriers now start getting alarmed because that means they're too underpriced and they're not earning enough premium for the risk. So it's a whole different way of thinking in that kind of in that world, and it's something, you know, again, I've kind of been a student of it for years, so understand that world, but it's not quite here yet, but yeah, it's definitely changing. But I will also say, and I want to make sure people know, because again, it's something I've kind of studied. Canada is really different from the UK. In the UK, you've got kind of one regulatory system, 60 million people, you know, living on an island that do it one way. In Canada, you've got half the population spread out over 50 times the space, and you've got 10 regulatory regimes. So it is a lot different, but there are a lot of similarities there.
Thing I wanted to say is, so thankfully, the retention of our partners, our lead buyers, is significantly better than 51%. But we realize that there could be pressure on retention, as I said earlier, and we're going to have to, if that happens, we know we're going to have to lower our prices, because this is a symbiotic relationship. This has to be win-win. If we're making all the money and the broker's not, then it doesn't work. So, yeah,
for sure. Question from Rob. If a brokerage has a specific demographic or market segment they're targeting, is Lowest Rates able to direct efforts to that region or segment?
I guess the answer is it depends. As long as it's not something that everybody wants, that's very rare, and you don't take anything that nobody wants, then we can work with you on that. But it really is a case-by-case basis. As we said, we want to create an ecosystem where every buyer can get a great mix of leads. So I can't answer that unless I know the specific situation.
Okay, fair enough.
But we'd be happy to talk to you about it.
I love the next question. What platform are the leads sent to the broker in?
It depends. So we like to make life as easy as possible for our broker partners, and we want you to close as many leads as possible. And as I said, like, all our leads are the same, and there's some partners that close 7% of them, and then there's some that close over 20%. And a lot of the difference is the platform that they use to manage those leads and how they manage the lead. Those leads are exactly the same. We're not sending better leads to the one that closes 20% or worse leads to the one that closes 7%. So we can be flexible with that and work to send you the leads in a way that allows you to close the most possible.
Obviously, being kind of Truefla and who we are, we're pretty big advocates in lead management. We have a lead management tool called True Leads that we do work with brokers to kind of consume those leads from Lowest Rates and help brokers manage those leads. And Justin's right. I mean, it really comes down to how you execute and manage those leads. It's one of the tough points that the brokers are challenged with. So that's my little Truefla plug right there. Next question. Let's see here. So I've got a question from Rick. Is there a way to specify car customers who also want to buy home insurance, or just people who are homeowners?
So we ask people if they want to bundle car and home insurance together, and that's obviously one of the considerations in terms of who we match the consumer with. So you'll know if they're interested in buying car and home insurance together or whether they're not. But that's something that is very important to our buyers. A lot of the brokers that buy car insurance, a lot of their success comes from being able to cross-sell home insurance. And in fact, we've had some partners that said, I don't know how well this is working for us. And then when we say, okay, well, why don't you count how many home insurance policies you've sold in addition to car insurance? They said, oh, we didn't look at that. Yeah, we're actually doing better than we thought on that. So it's an important component of the leads, because a lot of times you're able to get them to buy both.
So I guess a little bit of a side question to that, if a broker is getting a lead, and the lead is home and auto, is that a double cost lead, or is it still just one lead from Lowest Rates?
No, it's one lead. So if a person completes a car insurance quote, and then you're able to sell them home insurance, good on you. That's, you pay us once for car insurance.
Okay, great. Another question from Chantel. Can an individual broker purchase the leads, or is it the brokerage that needs to purchase? So have you worked with individual brokers?
Yeah, we have minimums. Typically the minimum, daily cap you need to buy is 10, and so that's tough for an individual broker. So typically we've had brokerages who purchase from us. But again, if you have individual questions, like we have a whole sales team that would be happy to discuss this with you and see if we could find a package that works for you. because, you know, we're here to support brokers and we want to see you grow.
Awesome. Next question here is from Jonas. With open banking on the horizon in Canada, in the future, aggregators like Lowest Rates may have permissioned access to people's financial data. That could open up the possibility of aggregators peeking into a lead's banking transaction data, finding out who they currently have insurance with, and proactively suggesting alternatives. Do you see something like that on the horizon for Lowest Rates?
I mean, it's not something that we're looking at right now. You know, it's far more sophisticated than we're looking at right now. I mean, I think maybe on the near term horizon is, you know, across Canada, will we be able to have access to people's credit in order to maybe score leads? Because I know that that's something we get asked a lot, because I guess credit is the biggest determinant in terms of risk for the carriers. So I'd say in the nearish or midterm, credit may be the biggest game changer if we're allowed to use credit to kind of determine risk and so on. But you know, there's a lot on the horizon. Between now and 5 years from now, it's impossible to know what things are going to look like. We have not looked into what you specifically asked, but I wouldn't be surprised if it's a possibility.
So, I mean, I guess that helps answer some previous questions as well. You know, with the adoption of credit in the Lowest Rates world, that will also help filter out, you know, kind of that perception of bad business and really give more quality to it. Would you agree?
Yeah, but I don't think that, like, I can tell you that most of the people who do quotes on our site have a credit score of over 700. I can tell you that because we also dabbled in selling car loan leads. And for whatever reason in the car loan market, there's more interested in subprime leads. And we thought, great, we can just cross market to our car insurance buyers, you know, with these car loan leads, saying, hey, you know, we got you car insurance, we can also get you a car loan. And it didn't work because the people on our site had credit scores that were too high for the car loan buyers. So, you know, kind of by accident, we found out that the vast majority of the people on our site actually are prime and have good credit. So it kind of debunks that myth that these are now. Look, you look at a site like Borrowwell. You know, Borrowwell is a free site where people go to check their credit score. Well, the people that are checking their credit score frequently are typically people that have poor credit. But those aren't the people who are coming to our site. The people who come to our site are typically prime credit customers.
Okay, that's actually a great myth to debunk. So that's good. Happened by accident, but it's good that it did. So Corey's asking a question that I think we answered already. What about reselling the lead to the next year? We did answer that, and I mean, if you want to re-answer it, Justin, you can.
Well, we don't. I mean, I know one of our competitors specifically requotes leads and says, "Hey, good news, Justin. We've found a better, lower price for you." So we don't do that. But again, as I said, you know, the competition's just a click away. If a person wants to go online and requote, they can do it. But as I said before, like, this is where you as a broker can really differentiate yourself by proactively reaching out to the consumer and making them kind of understand that you care about them, you're looking out for their best interests, you were looking at their policy, and either it makes sense for them to stay with the same carrier, or you should move them to a different carrier, or they should consider some other insurance options based on their life stage.
Okay, awesome. Question from Nancy. What about commercial insurance, where it is distributed through brokers only? Is there any leads in the system for commercial risks, or is it something you guys are even going to look at in the future? Is that a plan? Yes,
you know, commercial risk, we do have some commercial leads right now. We have far fewer commercial leads than we do, you know, personal, home, and auto, just because there's not as many people going online to look for commercial leads in the first place. And secondly, it just hasn't been a focus for us, but we do sell commercial leads. And again, would welcome you to contact us and we can chat about that.
Awesome. Question from Jason. How do you handle retention? Customers that shop online do the same do the same next year? I think we kind of answered that, but again, if you want to
Yeah.
take elaborate a little, you can.
Well, I mean, like I said, if someone's going to shop online year over year over year, they're going to do it. Whether they come to Lowestrates.ca or whether they go to Bel Air Direct or Sonnet or Desjardins or whoever else they find online. I think it's incumbent on you as a broker to create value with that consumer so that the person doesn't feel like they have to go and shop online again. Like our most successful partners have, they either do one of two things. They either sell they close at a very high rate, or they retain at a very high rate. And again, it just comes down to the actions that they undertake with that lead and with their consumer. Like a lot of that is up to you. If you don't give people a reason to move, then they won't even look.
Well, I think it's important to note, without naming the brokerage. I mean, I know the brokerage and I know them quite well. I mean, they used Lowest Rates as a strategy to grow their brokerage, and they're now one of the larger players in the market. From kind of when they started to now. So if you do manage the leads, I mean, leads are the lifeblood of any brokerage, and again, it comes down to how you manage it and putting a well laid out strategy to execute on around those leads. But certainly, the leads that come from Lowest Rates have worked for brokerages in the past. You can't always expect the best, because even if you have kind of an organic strategy, you're just not going to get that. But the onus typically is on the broker, and that's been proven, kind of many times in the past.
Yeah, I mean, look, we're one of the fastest growing companies in Canada. If you look at the lists of Globe and Mail, Maclean's Magazine, Deloitte Fast 50, like we are in the top 10 fastest growing companies in Canada year after year. The reason is because this works, right? We make our money from brokers by selling brokers leads. If this didn't work, we wouldn't be growing so fast. Like we have a very high retention rate of partners. We have partners that have started with us buying 10 leads a day that now buy more than 200 leads per day, on the back of growing using our leads. And then we have other partners that have started at 10 that are still with us 4 years later buying 10. Very happy with the business. So this needs to be a win-win, right? Like this isn't something where we make money and the broker, realizes 3 months down the line, oh shit, this is a waste of money. These guys are kind of taking some money. And no, we're trying to create sustainable relationships with partners for years and years and years. Like we want to be here. Like I said, we want to be the first place consumers go 10 years from now for financial services. And so we need brokers and we need these sustainable relationships. This works. And like Sharif said, I don't want to talk out of school about, which brokerages this has worked with, but, Sharif can maybe share that with you, or you could speak with our sales team, and maybe some of them would be willing to act as testimonials, and you could speak with them about how it's worked for them.
Yeah. So it's a nice segue to the next question. Are the leads sold to the brokerages based on a percentage of the premium, or is it a flat rate?
It's a flat rate. As I said, it's based on how many leads you buy. There's a normal price. You need to buy between 10 and 100, and that's one price. And then if you buy more than 100 a day, it's a different price. Now, where we do have different prices is by province. So the highest price leads are in Ontario, followed by Alberta, followed by Quebec and Atlantic. So it's based on premium. Premium's higher in Ontario than it is in the other provinces, and so we sell those leads for more.
Awesome. That looks like that's all the questions. I think that was fantastic, Justin, because I know a lot of brokers have always been leery about using using aggregator sites to as a part of their growth strategy. Again, kind of the way we look at it, as Truefla is, leads are the lifeblood of your business. You want to grow your business, you have to generate leads. Certainly, there's many different ways to do that. Organic is one way, and it's going to be a nice segue into one of the announcements we're making tomorrow for one of the products that we're launching in the market. but organic isn't the only way. Finding other ways, whether it's different partnerships like a Lowest Rates, or different ways to drive leads. As a brokerage, you have to constantly look at and find ways to drive those leads, and then how you're going to execute on those leads, how you're going to manage those leads. That's how you really turn your investment, or turn a return on your investment, and start generating that income for your brokerage. Any parting thoughts, Justin?
No, I think you made a lot of really good points there, Sharif. And one thing I want to say is about the benefit of buying leads from us is they're predictable. Because Sharif's right, like leads are the lifeblood of a business, and there's a lot of ways to skin a cat. There's a lot of different ways that you can generate leads. But with most of them, you don't know how many leads you're going to get in each day, right? If you're relying on organic search, you may get in 10 leads one day and 60 leads the next. And so it's difficult to kind of plan for bums in seats in terms of how many brokers that you need to have, how many people answering the phones. With us, you order 10 a day, you get 10 a day. So you can predict that. You order 50 a day, you get 50 a day. So you can predict that. So that leads to a lot of efficiencies. I think that's kind of a lesser known benefit of working with us.
Awesome. So I don't think we have any more questions. So I think we're going to leave it at that. Justin, thank you so much for being so candid with all your answers. I'm sure brokers learned a lot today, and I certainly hope some brokers take advantage of the service, because it is a great service for brokers, and we're always trying to find ways to help brokers grow. That's kind of our key tenet. Thanks a lot, Justin.
Yeah, thanks very much. Thanks, everybody.
So that wraps up our first day for Amplify 2021. It's been a great day. I want to thank, of course, all of our sponsors, from our title sponsors, CBN, our platinum sponsors, Wawanisa and Economical, our gold sponsors, Travelers and SGI, and our silver sponsors, IBAA and Crawford Adjusters. Thank you. Without you, we couldn't have done this. We've got a jam-packed day again tomorrow, starting at 9 p.m. Mountain Time, with Nick Roper, who's going to talk to us about business interruption insurance, he's probably one of Canada's experts. He is one of Canada's experts on business interruption insurance. So it'll be great given everything that's going on in the market right now. Nick will be talking to us about that. Jen Devlin from Sauce, which is a recruiting agency, talking about kind of how to recruit and find the best people. If you remember in the CEO session this morning, we talked about how important, especially with everything that's been happening, it is to have the highest quality people. We've got the Women Leaders in Insurance panel, which is being hosted by Manjeet Minhas, from Dragon's Den. So excited to have her on. Dave Lechasseur and his team from Crew, talking about unified communications in the insurance world. Crew is a communications company. And then we're going to round out the day and the conference with all the announcements from Truefla. I'll be leading the way. All the new products and the new tools that we're going to be launching in 2021 for you, our broker partners. Thank you again for joining, and we'll see you tomorrow morning.